All right, guys, welcome back to another episode of Everything Business. And I know that exams are around the corner. And so I got this paper, right? And I just thought of let's just do it, right? As a matter of fact, it was requested, right, by the person who sent it to me. So I just want to give a shout out, right, to that person right now, just to ensure, right, that they know how much I appreciate the fact that they would have sent this to me, right? Yes. So give a shout out. I want to give a shout out to Simeon, right, who sent me this paper, right, so that I can, get the chance to do it. So let's get right into it. So what I'll be doing, right, I'll be uploading question by solutions to the questions individually. All right. So let's look at this question, right? As you can see here, right, this is the first question, question 1. So this is the answer for question 1. Let's look at what the question is saying and let's break down the question, right? House of a Razzle Dazzle operate a clothing and accessory store. Following is a list of transactions occurred during October 2024, right? And so we are given a list of transactions here, right? And we are asked to use the forms that they provide. So if you look, these are the forms that they provide, right? So this is how it looks, right? So we are asked to use the forms that is provided to label each journal on the line, record entries for each transaction in their appropriate journal, complete general journal entries with suitable narrations, and balance and rule the cash book at the end of October 2024. So let's get right into it. Let's look at the first transaction. October 3 received an invoice for goods for resale from Z Fashion House for $6,000, right? Less 25% trade discount. The fact that we are receiving an invoice, anytime you see the word invoice, you know that there is no cash involved, right? Because invoice is only given when goods are being bought or sold on credit. So the fact that you see the word invoice there, it means that there is no cash involved. All right. And you're receiving the invoice, which would mean that you are buying, right? So the fact that you are receiving, so if you didn't know, when you are receiving the invoice, it means that you are buying. So this is a purchases invoice that is in question. So we would need the purchases what? Journal. So look at it, right? Purchases journal. I write it there, October 3, Z Fashion House, purchases ledger, because the purchases journal is linked to the purchases ledger, right? And if you look at the information that is there, it's 4,500. You say, sir, well, how is 4,500? And I see $6,000 here. You have to now subtract the trade discount. Trade discounts are not recorded in the books. Trade discounts are what you get when you buy in large quantities from your suppliers, or you can give a trade discount too if you're selling in large quantities. But you don't normally record trade discounts in the books, right? So that is the reason why we now have to find 25%, right, of the 6,000, right? So 25%, 25 divided by 100, multiply by 6,000, you get 1,500, minus the 6,000 from that, you get the 4,500, right? So that is the amount of money that you actually owe to Z Fashion House. So that is the amount of money that you will record right there. All right, I'll be going quickly, so you can always pause, rewind, and continue. The second transaction, cash register tape showed cash sales totaling 13,000, right? And you know that that's a cash book item. So here is the cash book. So let me just show you the cash book, right? The fact that it says cash register tape showing cash sales, which means that you are selling goods and you are receiving cash. That is the reason why it is in the cash book, because cash is involved, and it will be on the debit side. So October 6, sales general ledger, 13,954 in the cash column. Remember to put in the dollar signs. Number 7, October 7, sorry. Paid advertising expense in cash, 2,600, right? Again, this is a cash book item because it said that it says cash right there, right? You are paying advertising expense, which means that it will be on the credit side in the cash book. So October 7, advertising general ledger, and it's cash 2,600. Then October 8th, bank $10,000 cash, which means that you are taking money out of the cash till, putting it into the bank account of the business. So the cash is losing, the bank is receiving. So that is what we call a contra entry, right? So if you look at the cash book here now, right? So if you look at the cash book there, right, as I zoom out so you can see it, I would now need to credit the cash account, October 8th, put bank in the details, put the C there for contra in the folio column, and you put the $10,000 in the cash column, and now you'd have to make a debit entry in the bank column because it's a contra entry. If you don't remember how to do cash book, you need to check out my video on cash book before exam, right? You obviously see that they can test cash book in the exam. This is January paper, right? So it's a high possibility that they may even test it come June, just to see if you understand. All right, good evening. All right, so moving on to so for October 8th, let me just finish it up. October 8th, right, in the cash in the details column you have cash, in the folder column you have the C to represent contra, and you put the information in the bank column, or the money in the bank column, because the bank is receiving. All right, and then now we move to October 12th. Receive a credit note from Z Fashion House for goods returned as damaged, right, costing 1,800, and we less 25% trade discount. Now the fact that you see it says we receive a credit note, right, it means that we would have sent to them what is called a debit note, because when we are sending back goods to our suppliers, right, we call that return outwards, and we normally send a debit note to them. So when when Z Fashion House now would receive that debit note with the goods that we send back, what they would now do is they will send to us a credit note, just to indicate to us that our account have been credited, which would mean that we would owe them less money. So that is why that is what this transaction is saying. So you have to pay attention to that. All right. So we have our return outwards journal there, right? So as you can see, our return outwards journal there, October 12th, right? Z Fashion House, they have PL in the folder column, because that is where Fashion House account would be, and you have 1,350, and you may be wondering, how is it that I have 1,350? All I did was I calculate 25% on the 1,800, the same way that I would have calculated it otherwise. So it's 25 divided by 100 multiply by 1,800, and for those persons who are more savvy in math, so you minus the 1,800 from that, and you get the 1,350, because we don't record discounts, especially trade discounts, right? For the persons who are more savvy in maths, instead of writing 25 divided by 100, you could have simply written 0.25, right? It's the same thing. Consider 25 divided by 100, 0.25. In the exam, you're going fast, you can just type 0.25 for those persons who are math savvy. Moving on to October 14, received an invoice totaling 4,790 for additional shelves and mannequins for business use from Display House. Now I want you to pay attention to this transaction. For this transaction is talking about fixed assets, right? And if you don't pay attention, it may throw you, and you may be wondering, what do I need to use the general journal for? Because you will think that this is good, but this is actually a fixed asset. So we should record this in our general journal. And if you look, I have a name for it here, right? I call it fixtures, because really it is fixtures, right? It is fixtures for the shop, right? The shelves and the mannequin, all these things are, the fixtures for the shop. So October 14, if I want to write shelves and mannequins, that would be okay, just the same. If I write fixtures and put shelves in bracket, that still would be okay. If I write fixtures alone, that still would be okay, right? So you record it in a general journal. We debit the fixtures because it's a fixed asset that we are buying on credit, and we put the name of the supplier, Display House, in the credit column, right? The question did say we must have narration, so here's the narration: fixtures bought on credit. You could have said shelves bought on credit. You could have said shelves and mannequin bought on credit. All of that would also be correct, right? Remember that the notation is simply just telling what the transaction is, describing the transaction. So we move on to October 18. Issued an invoice to Queen B for goods. Now let me just pause right here. The fact that it says issued an invoice, it means that we are selling, right? So that's a sales invoice. Please pay attention to that, right? So issued an invoice to Queen B for goods 3,600 less 15% trade discount, right? So that's a sales invoice. So there it is. October 18, you put in the sales journal. October 18, Queen B SL in the folio column for sales ledger, because the sales journal is linked to the sales ledger. And you may be saying, sir, how you get $3,060? Then it is because I would have found the 15% of the 3,600 and subtracted it. So it is 15%, 0.15 multiplied by how much was it again? 3,600, 3,600, 3,600. That would be 540. So you minus the 3,600 from that, you get 3,060. All right. Moving on now. October 19, returned 1,200 worth of additional shells purchased on the 14th of March. So you're really just going to reverse this transaction. So as you can see, right, I debited display house and credited fixtures, right? And you realize that when I credit, I move a little bit away from the margin. I also have a video on General Journal, so you can check that out as well, right? And I put the narration there, fixtures return, right? Moving on to October 25, issued a credit note to Queen B for goods. I can stop right there. So what it means is that Queen B would have been, we just sell some goods, right, on the 18th. They have sent back some goods to you, and obviously they would have sent back a debit note, so now you are going to send back to them a credit note, right? And so you have a returns inwards journal. So here it is, returns inwards journal, October 25, Queen B SL 391. And I got 391 because I would have subtracted the 15% from the $460. October 27, paid Z Fashion House by check in settlement of his account at this date, less 2% cash discount. Now, I want you to pay attention to this. You may be saying, how is it that I don't see any figure for this? What should I do? Right? But if you look back, Z Fashion House, right? They are your supplier. You buy products from them, not true? So if you look back on your purchases journal and your return outwards journal, or you can call it the purchases returns journal, so you will see that you owe Z Fashion House 4,500, but you sent back 1,350, right? So how much do you actually owe them? So it is going to be 4,500. Sorry, 4,500 minus the 1,350. You actually owe them 3,150, right? And because you are paying them early, you are settling your account early, right? Businesses normally give cash discounts when their customers are settling their accounts early, right, or on the stipulated time. The cash discounts would obviously be recorded here in the cash book, right? So we record cash discount. So we go to our cash book, and if you look in the cash book now, the fact that we are paying money, right, it would appear on the credit side of the cash book. So here it is, October 27th, Z Fashion purchases ledger, because that is where his account is. The amount that we received for discount is 63, and I will put the information in the bank column because it did say check, we paid by check. So it is $3,087. Similarly, October 29, receive a check from Queen B in full settlement of its account at this date, less a cash discount of $175. So we do the same thing, right? So if you look at Queen B, they had owed us $3,060, but they had sent back goods to us, $391 worth of goods. So we would subtract the 391 from the 3,060, right? And then we take out the discount, which is $175, and so they would have to pay us now $2,494, right? So we finished all the transaction. They did say that we should balance and rule the cash book. That's the only balancing up that they asked us for. right? Pay attention to that. I know some persons will go into the exam and want balance off everything, but that is time wasted that you will not get marks for, because they did not ask for that, right? So it says balance and rule the cash book. And when it says balance and rule, it simply means balance of the cash book, right? The ruling is basically the underlining, these double lining and stuff like that. That's what the rule means, right? So you balance off the cash book, right? And basically that's it. If you don't know how to balance off a cash book, as I said before, watch my video, right? And I'll leave a link in the description below, right? Remember to like and subscribe and share. And I'm coming up in a little while, right, with question 2. So stay tuned. All right, see you soon.